Ready to decode company financials and ace the CFA Level 1 exam? Financial Statement Analysis, FSA, is crucial. This tutorial will guide you step by step, providing the knowledge and practice you need to succeed. Let's get started on your journey to becoming a CFA charter holder. Before you begin, be sure to check the comments section below. You'll find a wealth of practice problems and their detailed solutions waiting for you. Take your time, work through each question at your own pace, and use the explanations to deepen your understanding. Welcome, future finance experts. Before diving into the core material, ensure you're familiar with the CFA Institute Learning Ecosystem, LES. This platform is your essential digital hub for all study resources. Use the LES to personalize your study plan. Set reminders and track your progress effectively. It helps you identify your strengths and weaknesses as you move through the curriculum. This tutorial is designed for active learning. Pause after each section to engage with the interactive questions and scenarios provided in the full material. This hands-on approach reinforces understanding. Each topic includes real-world applications or case studies. These demonstrate how the concepts are used in practice. Applying theory to scenarios is key for retention. Test your knowledge at the end of each module with self-check practice problems. This helps solidify your learning and build confidence before tackling exam-style questions. What exactly is financial statement analysis? It's the systematic process of evaluating a company's financial statements. The goal is to make informed investment and business decisions. Understanding the purpose and context of analysis is fundamental. You need to know why you are analyzing the statements and what questions you are trying to answer. A key outcome is applying the financial statement analysis framework. This structured approach ensures you cover all necessary steps for a comprehensive analysis. Imagine you're an analyst assessing a company for a major investment. Your manager asks for your initial steps. What do you do first? You articulate the purpose and context of your analysis. The CFA curriculum outlines a 6-step framework for FSA. This provides a systematic process for evaluating a company. Following these steps ensures a thorough analysis. The steps are: 1. Articulate purpose and context. 2. Collect data. 3. Process data. 4. Analyze. Interpret data. 5. Develop and communicate conclusions. And 6. Follow up. Each step is vital. Which step involves calculating financial ratios and identifying trends? That falls under Analyze, Interpret data. This is where you turn raw numbers into meaningful insights. Where do analysts get reliable financial data? Regulated sources are essential. These include financial statements filed with regulatory bodies. Regulated sources ensure accuracy, transparency, and comparability. Strict rules and oversight protect market integrity. This is why you can trust the data from these sources. The 3 core financial statements are the foundation. These are the balance sheet, income statement, and cash flow statement. Mastering these is non-negotiable. The balance sheet shows assets, liabilities, and equity at a point in time. The income statement summarizes revenues and expenses over a period. The cash flow statement tracks cash inflows and outflows. Regulators like the SEC and IOSCO set standards and enforce compliance. This regulatory environment is critical for maintaining investor confidence and fair markets. Beyond the core statements, supplementary information is vital. Financial notes, management commentary, MD&A, and auditors' reports provide crucial context and detail. Never analyze the numbers in isolation. The balance sheet provides a snapshot of a company's financial position. It follows the fundamental accounting equation: assets, liabilities, plus equity. Key sections include current assets, non-current assets, current liabilities, non-current liabilities, and equity. Understanding the components of each is essential. Analyzing the balance sheet helps assess liquidity and solvency. Ratios like the current ratio and debt-to-equity ratio provide insights into a company's ability to meet its obligations. The income statement, or profit and loss statement, shows a company's financial performance over a period. It details revenues, expenses, and ultimately, net income. Key areas to analyze include revenue recognition policies and expense recognition. Understanding how and when revenue and costs are recorded is critical for assessing profitability. Watch out for non-recurring items that can distort true operating performance. Earnings per share, EPS, is a key metric derived from the income statement, but understand its nuances. Using income statement ratios and common size analysis helps compare performance. Gross margin, operating margin, and net margin reveal profitability trends and efficiency. The cash flow statement tracks the movement of cash into and out of a company. It's divided into three main activities: operating, investing, and financing. Operating activities show cash from core business. Investing activities relate to long-term assets. Financing activities involve debt, equity, and dividends. Positive cash flow from operations is crucial. It indicates the business can sustain itself without external funding. Analyze trends and compare cash flow to net income. Key ratios, like the operating cash flow ratio and free cash flow, provide further insights. They help assess a company's financial health and flexibility. A powerful skill is understanding how the three core statements are linked. Changes in one statement impact the others. This integrated view is essential for forecasting and analysis. The three-statement model connects the income statement, balance sheet, and cash flow statement. Net income flows to retained earnings on the balance sheet. Depreciation affects all three. Building a simple three-statement model helps visualize these connections. It's a core skill for financial modeling and valuation. Practice linking the statements. Mastering FSA for the CFA exam requires consistent practice. Top candidates emphasize the importance of working through numerous practice questions and mock exams. Utilize the CFA Institute Learning Ecosystem for official practice materials. Supplement with other reputable providers for additional questions and explanations. Simulate exam conditions when practicing. Time yourself and minimize distractions. Review every answer, especially incorrect ones, to understand the underlying concepts. Prepare your CFA-approved calculator thoroughly. Know its functions inside and out to save time during the exam. Practice using it for various calculations. Focus your final review on weak areas identified through practice. Use your study tracker to guide your efforts. Targeted review is more efficient. Stay consistent with your study schedule, even if it's just short sessions daily. Regular engagement helps retain information. Don't cram at the last minute. Prioritize rest and recharge before the exam. Adequate sleep and breaks are crucial for cognitive function and retaining information. Trust your preparation. You've covered the fundamentals of financial statement analysis for CFA Level 1. By understanding the framework, sources, core statements, and their linkages, you build a strong foundation. Consistent practice is your key to success. Ready to solidify your understanding and tackle more complex topics. Dive back into the CFA Institute learning ecosystem. Practice the concepts, work through examples, and build your confidence. Your CFA journey continues now.